Group B. Short answer questions. 8 times 5 is equal to 40. 12. A limited company issued 10,000 shares of 100 rupees each, amount payable as under. On application 35 rupees. On allotment 40 rupees. On first and final call 25 rupees. Application were received for 15,000 shares and allowed to 12,000 applicants on pro rata basis and rest were rejected. Excess application money were adjusted on allotment. All called money were duly received except on 500 shares on first and final call. Required. Journal entries for share application, share allotment, first and final call. Solution. Journal entries. Date. Particulars. LF. Debit. RS. Credit. RS. Share application. I. Bank A/CDR. 15,000 times 35. 525,000. To share application A/C. Being share application money received. Share application A/CDR. 15,000 times 35. To share capital AC. 10,000 times 35. To share allotment AC. 2,000 by 35. 525,000. 2. B. 525,000. 350,000. 70,000. To bank AC. 3,000 by 35. Being application money transferred. To share capital and share allotment. Account rejected application. Money refunded. 105,000. Share allotment. I. 2. Share allotment A/CDR. 10,000 times 40. For 100,000. To share capital A/C. For 100,000. Being share allotment money due. Bank A/CDR. 400,000 minus 70,000. 330,000. To share allotment A/C. 330,000. Being share allotment money received. C. I. 2. Share first and final call. Share first and final call A/CDR. 10,000 times 25. 250,000. To share capital A/C. 250,000. Being share first and final call money due. Bank A/CDR. 10,000 minus 500 times 25. 237,500. Calls in arrear A/CDR. 500 by 25. 12,500. To share first and final call A/C. 250,000. Being share first and final call money received except on 500 shares. 13. I. A company purchased following assets at an agreed price of 216,000 rupees. Furniture 50,000 rupees. Other assets 100,000 rupees. The company paid agreed purchase price by issuing shares of 100 rupees each at 20% premium. Required. Entries for purchase of assets and issue of shares. Solution. Journal entries in the book of company. Date. Particulars. LF. Debit. RS. Credit. RS. 1. Furniture A/CDR. 50,000. 2. Other assets A/CDR. 100,000. Goodwill AC, B/F/DR. 66,000. To vendor A/C. 216,000. Being assets and liabilities taken over. Vendor A/CDR. 1,800 by 120. 216,000. To share capital AC. 1,800 by 100. 180,000. To share premium AC. 1,800 by 20. 36,000. being issue of 1,800 shares at 100 rupees each at 20% premium. 2. A company issued 1,000, 10% debenture of 100 rupees each at 5% premium, redeemable after 5 years at 15% premium. Required: entries for issue and redemption of debenture. Solution: journal entries in the Book of Company. Date. Particulars: LF. Debit Rs. Credit Rs. 1. Issue of debentures. 2. Bank A/CDR, 1,000 by 105. 105,000. Loss on the issue of debenture A/CDR, 1,000 by 15. 15,000. To 10% debenture AC, 1,000 by 100. 100,000. To premium on issue of debenture AC, 1,000 by 5. 5,000. To premium on redemption of debenture AC, 1,000 by 15. 15,000. Being 1,000 of 100 rupees each issued at 5% premium redeemable at 15%. Redemption of debentures. 10% debenture A/CDR, 1,000 by 100. 100,000. Premium on redemption of debenture A/CDR, 1,000 by 15. 15,000. To Bank AC, 1,000 by 15. 115,000. Being redemption of 1,000, 10% debenture of 100 rupees each at 15% premium. 14. A company's last year ledger balances are given below. Particulars: amount, Rs. Opening stock, 50,000 rupees. Purchase, 120,000 rupees. Sales, 200,000 rupees. Salary, 25,000 rupees. Water and electricity, 6,000 rupees. Rent and other expenses, 8,000 rupees. Commission received, 4,000 rupees. Wages, 10,000 rupees. Capital, 125,000 rupees. Fixed assets, 110,000 rupees. Additional information: closing stock 60,000 rupees. Salary due 5,000 rupees. Depreciation on fixed assets at 10%. Required: trading account, profit and loss account. Solution: trading account of company. As on last year. DRCR. Particulars: amount, Rs. Particulars: amount, Rs. To opening stock, 50,000. Buy sales, 200,000. To purchase, to wages. To gross profit C/D, 120,000. By closing stock, 60,000. 10,000. 80,000. Total, 260,000. Total, 260,000. Profit and loss account. As on last year. DRCR. Particulars: amount, Rs. Particulars: amount, Rs. To salary 25,000. By gross profit B/D, 80,000. Add salary due 5,000. To water and electricity. To rent and other expenses. To depreciation on fixed assets, 10% of 110,000. To net profit C/D, 30,000. By commission received, 4,000. 6,000. 8,000. 11,000. 29,000. Total, 84,000. 84,000.